Hello student, I welcome all of you in this lecture. In today's session, we are going to discuss about the accounting standard. Let us see the table of content of today's session. Today we are going to discuss about the accounting and its theory. Next we are going to learn about the meaning, purpose, significance and types of accounting standards. Further, we will learn the procedure for formulating the accounting standard, and lastly, we will discuss about the accounting standards followed in India. Student, as you know, accounting reports, which is consist of financial statements, that is revenue statement and balance sheet, is used by the different users like owners, management, creditors, regulatory authorities, and many others. For the purpose of using all this is different for each one. Owners may use to know the profits, management may use this for managing the business, and so on. Now, student, you must have clear about one thing for the accounting, that accounting is a language of business which communicates the financial information of the enterprises. It means whatever is happening in the business, that is to be communicated to the users. This is the purpose of accounting. Now, for making the reports of such type of statements, the accounting needs some theory. Student, what do you mean by the accounting theory? Accounting theory is nothing else but it is consist of principle, concept, conventions, rules, guidelines, and accounting standards, which brings uniformity in accounting system, procedure, and presenting of the reports. And by using the accounting theory, when the accounts are prepared, those accounts will become the more useful to the user, and they are become a more comparable. In my previous lecture, we had discussed about the principle, concept, and convention. Let us today see and discuss about the accounting standards and guidelines. Student, first thing, accounting standard. Accounting standard is one document, or I can say it is a written document which mention the generally accepted accounting principle. It is a sort of law, a guide of action, or a settled practice, or a code of conduct. These are the norms followed by universally for preparing the accounting statements like revenue statement and balance sheet. Now, the question will arise why this accounting standard is needed. So let us see the purpose of accounting standards. Student, you know the financial statement must have four components, like it should be and must be consistent, it should have adequate information, financial statement should be reliable and comparable. Now, how it is possible to make a financial statement must have all these components. For this, we need a accounting standards. If accounting standards will be there, then it is possible that the financial statement show the true and fair view. Accounting standard provides a basis to resolve the potential financial conflicts, if any, among the various groups. Accounting standard ensures the uniformity and it also ensures the comparability. Accounting standard is a norm for preparing the accounting statements. Accounting standard helps the auditor in auditing the accounts. It means Or in other words, we can conclude that accounting standard is to provide the information to the user of a financial statement as the basis on which a financial statement has been prepared. And second is, accounting standard needs to harmonize the diverse accounting policies and practices to make the financial statement more meaningful. Now let us see what is the need or significance of the accounting standards. Accounting standard provides right direction for maintaining the accounting records. Second benefit is accounting standard make accounting procedure universally acceptable. Third number point, accounting standard facilitate the uniform preparation and reporting of the financial statements. Accounting standard helps the public accountant to deal with the client. It raises the standard of the audit of the accounts. Student, on the basis of above discussion, I had categorized the benefit of accounting standards in the three categories. First one is it reduces the difference in treatment. It means the different transactions are treated in a different way in a different business. The guidelines given under the name of accounting standard will reduce the differences in treatments. Second one, additional disclosure. Different accounting standard needs a different disclosure. So if all the follow the same accounting standard, it means what? There will be the all disclosure from the business side. And last one is, it is very easy for all the user as well as the auditor for auditing to make the comparison between the two companies, 2 years or same year, first quarter, second quarter, and third quarter, and so on. These are the benefit of accounting standards. Students, now turn our talks towards the types of accounting standards. There are two types of accounting standards are there. One is international accounting standard and second one is national accounting standards. First we take discussion on the international and then slowly we will go to the national accounting standards. Student, it is the responsibility of IASC, full form is International Accounting Standard Committee, which is formed in 29th June 1973 to make a international accounting standards. On 29th June 1973, 16 countries bodies from the nations who are called the founder members had signed an agreement and constitution for its formation. The committee had its headquarters in London. The main objective of International Accounting Standard Committee is to formulate and publish in the public interest standard to be observed in the presentation of audited financial statement and to promote their worldwide acceptance and observation. Now, it is a duty of this committee to synchronize these standards with the national standards. Now, let us see the national accounting standards. The national accounting standards are mandatory for all the countries. It means that each and every country must have their own accounting standards, and those accounting standards overcome the international accounting standard. But when any country doesn't have a national accounting standard, then they can go for the international, or they can follow the international accounting standards for preparing the accounting statements. Now, we talk about the accounting standards in India. The accounting standards are made by the council, and council consists of two bodies. One is Institution of Chartered Accountant of India and another is the Institution of Cost Accountant of India. These two bodies had established a board which is called the Accounting Standard Board, abbreviated as a ASB, on the 22nd April 1977. Let us see what is the main purpose of ASB, that is the Accounting Standard Board. The main function or the purpose of ASB is to formulate the accounting standard so that the standards are to be established by the Council of the Institution of Chartered Accountant. While formulating this accounting standard, they pay attention on the international accounting standard also, and they try to integrate national and international accounting standards. While formulating these standards, this board, that is ASB, pay attention on the prevailing laws, custom, users, and environment prevail in India. Let us see what is the procedure for preparing the accounting standard. ASB determine the area which needs the formulation of accounting standard. It means the first step is there, that where the accounting standard or guidelines is required. Second step is this board will prepare a rough draft which is called the ED, that is the exposure draft. This exposure draft then published in the professional journal and circulated to receive the comments from the professional bodies, securities market, and regulatory agencies. Next step is, after receiving the reviews, suggestions, and comment, necessary adjustment or changes are done in the exposure draft. And then this revised exposure draft is published as a accounting standard. Now, last we will see the accounting standards in India. In India, there are 32 accounting standards are there, out of which accounting standard 1 to 29 are mandatory in India, whereas from accounting standard 30 to 32 are non-mandatory in India. Student, please pay attention. Ahead, I am going to read out the list of 32 accounting standard. Please don't worry about it. You just try to remember the accounting standard number and the purpose of that. Because exam point of view, there will be the objectives based on this accounting standard number and the purpose. And next lecture of mine, we are going to discuss about in detail about the all mandatory accounting standards. Let us see first the list of 32 accounting standards. Accounting standard 1 deals with the disclosure of accounting standard, disclosure of accounting policy. AS2 deals with the valuation of inventory. AS3 deals with the cash flow statement. Student, you have to remember like this. AS deals with the cash flow statement. Same thing, AS4 deals with the contingency and event occurred after the balance sheet date. Accounting standard 5, that is AS5, deals with the net profit or loss for the period of prior period items and changes in the accounting policy. Accounting standard 6 deals with the depreciation accounting. Accounting standard 7 deals with the accounting for construction contracts. Accounting standard 8 deals with the accounting for research and development. In bracket I had written W, it means it is withdrawn by the council now. Accounting standard 9 deals with the revenue recognition. 10 deals with the property, plant and equipment. 11 deals with the accounting for the effect of change in foreign exchange rates. 12 deals with the accounting for the government grants. 13 deals with the accounting for the investment. 14 deals with the accounting for the amalgamation. 15 deals with the accounting for retirement benefits in the financial statement of the employer. Accounting standard deals with the 16 borrowings cost. 17 deals with the segment reports. 18 deals with the related party disclosure. 19 deals with the lease. 20 deals with the earning per share. 21 deals with the consolidated financial statement. 22 deals with the accounting for taxation on income. 23 deals with the accounting for the investment in associated in consolidated financial statements. 24 deals with the discontinuing operations. 25 deals with the interim financial reports. 26 deals with the intangible assets. Accounting Standard 27 deals with the financial reports of interest in the joint venture. 28 deals with the impairment of assets. 29 deals with the provision contingent liabilities and contingent asset. Student, till here it is a mandatory accounting standards. Let us see, there are three non-mandatory accounting standard, that is a 30, 31 and 32. 30 deals with the financial instrument recognition and measurement. 31 deals with the financial instrument presentation, and 32 deals with the financial instrument disclosure. Just I read it for you so that in the next lecture when we will discuss each and every accounting standard, that should not be new for you. My request to all of you is that at least go through this 32 accounting standards. So this way, in today's lecture, we had seen about the accounting and accounting theory. We had seen about the purpose, significant types of accounting standards, and which are the list followed in India as accounting standard, and which are mandatory and which are non-mandatory. In the next lecture, I'm going to discuss with you in details all this 32 accounting standards. Thank you, students.